What's up, everyone? What's up? How are you doing? Sorry, the timer ran out and I wasn't there. I was grabbing some water. Now, welcome. Good to have you all here. Please let me know if the live stream is lagging, yes or no, because I do see that I dropped frames 35% over the last 2 minutes. What's happening? It's the same as always. The connection is the same. The cable is the same. Live stream's the same. YouTube says the current bitrate is lower than recommended, but also that is the same. So I'm actually not really sure what the big deal is. Yeah, we'll see how it goes. And let me quickly check. So I can actually go to the Wi-Fi system that we have and optimize it. So let me try and see if I can make something work. Network optimization, scanning. So yeah, what's up, everyone? Good to have you here. Good to have you here. It's another day, another live stream. We're going to cover Elliott Waves, higher time frames, and we're especially also going to zoom into this range over here because it's just interesting. So yeah, let's see how TradingView works today. This morning it's been nice. Let's see. The network says it's perfect. So, but again, a minute ago, 32% dropped frames over the last 2 minutes. What's happening, yo? What is happening? Why is internet failing? Why is it so rubbish? Anyway, if it's very laggy, I guess you guys are gonna tell me, right? So I can do something about it, either restart or do something else. And my trading view is back to refreshing. Yeah, so I don't know. It might be something with the live stream. The live stream is HD. So yeah. If I set quality higher than 720. What a interesting start to the live stream. Let's hope that things turn out well as we go along. Let's see how everything is gonna hold up. I'm gonna refresh the chart. So yeah, in this live stream, we're gonna cover Elliott Waves. We're gonna zoom out to the higher time frames and then zoom into the local range because it's interesting, right? So that is why we are gonna talk about this range as well in particular. We moved our screener tools to a more convenient spot, allowing you, look what I got a message here. Allowing you to screen all assets directly from here. Thank you. That won't be necessary, but I do appreciate it. I won't make use of it though. Okay, so a quick refresh always helps as well. So yeah, that's what we're gonna do in today's live stream. So whoa, Mike D, Malon, Hiop, welcome. Good to have you here. Mike D, by the way, thanks for the feedback as well. Lowry, good to have you here as well. Flotty, what's up? How are you doing? Yo, Flotty, how are you doing? How are the waves treating you today? Meet, welcome to Gold. Yo, thanks, man. Welcome to the team. And yeah, make sure to send me an email as always. koenztrading@outlook.com. Send me your YouTube, Discord, and Telegram username, and I will make sure to get you sorted. So, yo, Meet, Mr. Amit, bonjour, mon ami. Send me an email, man. What a start. Kiwi, how you doing? Thanks for your support, joining the bronze team as well. What a great start of the stream, but at the same time, my internet might be a bit of an issue, so let me know how it goes. I have no idea why, but we're gonna make the best out of it, right? So, yo, Kiwi, cheers. Seriga, what's up? How are you doing? It's probably about time. Yeah, cheers, Kiwi. Bronze is the support level, so thanks for your support, Kiwi. There's Innovation, how you doing? It's a pleasure. Yeah, the new videos, in case you haven't seen them, I added a new playlist on YouTube. So if you go to my channel, then you will find a playlist that includes everything you need to know about Elliott Waves. It's a full guide, course, simple, whatever you want to call it. I put it all in the title because who cares? the whole thing is in here, from impulses all the way to WXYXZs, with the structure, Fibonacci, Fib time, targets, volume, everything you need to know about Elliott Waves in particular, and other videos will be added to that playlist as we go along, but those won't be structure related because all the Elliott Wave stuff is already in there. But it will be Elliott Wave related, like how are probabilities changing over time with new information, the 618, the 886, like these type of things, right? So these will be added in time. Mondo Tav, give us the trance music playlist. It's pretty much one song. Samurai from Jim Joseph is the theme song, I suppose. It's not really a playlist. It's the no copyright songs playlist pretty much. Tim Fozzy, how you doing? Normal. Okay, so for some the stream works perfectly fine. Okay, that's good. At least for most. Regarding the lag, every live stream it lags for 1 second, but I refresh and then works. Okay. Maybe it's a bit of a YouTube thing. I don't know why it is. I just sent you an email. Okay, I'll get you sorted, Power Meet, afterwards. Cheers. Welcome to the team. Top step of the podium, yo. Yeah. So good to know. What's up, Cola? How you doing? It's been a while indeed. Going to get into new places and make notes. Cheers, Tim. Make sure to let me know how it goes. Make sure to let me know. Okay. Partway through my notes of the playlist right now. Still going. Good job, Kiwi. And then implement as well, right? Because it's a lot of information in that playlist, but it is all about implementation in the end, right? So what I recommend on how to study Elliott Waves is to start watching with the video about the impulse, then learn everything about the impulse, make the notes, summarize it for yourself, know everything out of your head, find some impulses on the chart, because in real life, impulses always look a bit different than the perfect textbook impulse, right? So, but you will be able to recognize impulses because of how steep structures are, and then you need to count 1, 2, 3, 4, 5, put the extensions in, put the retracements in, see if they're respected or if it's common or less common, and so and then go to the next one and then the next one, because learning everything can be very overwhelming. A good idea can be to just run through the videos once and then start at the front and then go one by one. So yeah, somehow my chart just refreshed. I don't press any buttons, but it has to do with internet. So yeah. Consider coloring the thumbnail backgrounds red for live, blue for update, and leave the training green, just a suggestion. Yeah, it's good to know. I'm just figuring out some stuff. It's a bit of branding as well, as the logo is blue, dark blue, and green, which it already has been for many years. So Koens is actually a brand that existed before the YouTube channel. It's my own business in the gaming and esports industry, which got into trading. So it's those are the main colors of the channel. So I try to brand it now instead of all the random Bitcoin pictures. I'm looking more into trying to brand the channel as well, with videos that have thumbnails related to the color scheme that I use. So yeah, but I'm a complete noob in designing, so I'm just trying my best. But it's good to have feedback from people that have maybe some more experience or have some ideas, because I love feedback. The thumbnail is chosen thanks to your feedback as well for the playlist. So Barbie, what's up? Leon Preto, how you doing? Contrarian, my batch is gone. Then probably your YouTube membership ran out, so you might have to check there. Okay, so summary of what's coming, because we're going to start. We're going to start with, of course, Elliott Waves on the higher time frame. It's going to be a short summary of the previous video, and then we're going to talk about this range, because it's just interesting to talk about the range. Some people like to keep things very simple, myself included, right? The higher time frames are very clear. However, I also like the nitty-gritty. I also like to figure out what's happening locally and talk about it, think about it, discuss it with all of you as well, which I think only supports your Elliott Wave knowledge and your Elliott Wave analysis, right? So this range is very, very interesting, and it's fun to look at it. Now, if you trade 4 hour or daily, it's super easy, right? you don't have to be an Elliott Wave master, or you don't even need any credibility to really know what's happening locally. But it's interesting to look into the 15 and 1 hour time frame in this range, and see what we can make of it, right? So that is what we're going to do in the second part of the stream. And then, of course, we have chatting and Q&A as always. So answering the questions and all the good stuff, no? So, yeah. We're going to start on the weekly time frame. Let me quickly, my chat disappeared. So there we go. Korean sub. I don't know what you mean with a Korean sub. You mean like subtitles. In that case, I'm not Korean. I would need a software to run subtitles, or YouTube does it automatically probably. So, and also Koreans are not my most viewed audience. So I guess YouTube provides subtitles in most languages. But okay, so we're starting minute 80. That's good. So on the weekly time frame, so as mentioned, right, the higher time frames are very easily tradable, easy recognizable, easy invalidations. There's clarity. We know also the levels that we need to look for when probabilities are changing, right? So, and I will explain that as we go along now. And then we're going to zoom into the local range because, you know, it's interesting to try and figure out what's happening on those lower time frames and assign some probabilities to it. But we're going to start on the higher time frames. So on the weekly, very simple, 5-wave impulsive structure to the upside. As long as we don't reach 49.3K, this is your preferred scenario at the moment, right? Your primary on the weekly time frame. And only when 49.3K would be touched without taking the all-time high are we going to discuss other bullish scenarios and potentially bearish scenarios. So here we have an impulse 1, 2, 3, 4, 5, and inside the yellow wave 3 we have the sub-degree count 1, 2, 3, 4, 5 in green. If the low of your 4 is in, we did so in the common target area for 4, 38205, from the low of 2 to the high of 3. And then we want to see impulsive structures to the upside in a wave 5. Now the common target area for your wave 5 is between the 0.618 and the 1-to-1 on the chart, 75.9K and 110K. Now that is a very big area. So what's going to be interesting is the 4-hour time frame. Because by counting the 4-hour time frame, we can niche down the target area. So this is your weekly target area, but your daily target area, and then your 4-hour target area, and then your 1-hour target area are going to create boxes inside this box. And by knowing the count on each time frame, we can slowly condense and, you know, make that target area smaller and smaller and smaller as more information comes in. Right? We don't yet have a lot of information because we didn't yet take the all-time high with regards to impulsive structures on the lower time frames. But at least we now have an estimation for the green wave 5. And that is all we need. And then inside that area, we can observe what happens. If you want to know how I got these fibs on my chart, first of all, I'm on a log chart. So here at the bottom, the blue L, right? Logarithmic, linear. We're on the log chart, because we're on a weekly time frame and the percentage move here is about 300. So it's recommended to use log on these higher time frames, right? And the 1-to-1 here is taken from the low to the high of 1 to the low of your wave 4. And then the 0.618 is taken from the low to the high of 3 to the low of wave 4. And that then gives you this target area. Actually interesting. I think actually I thought so. I was already wondering when lol. Koen, you're such an amateur. I was already wondering when I explained it. How can wave 1 be so long and then the 1-to-1 for wave 5 be so short? Kek W. So what you do with the 1-to-1 is take a fib, trend-based fib, from the low to the high of 1, either or, right? Let's take the lower one for that sake. To the low of 4, toggle on the 1-to-1, make this one green. Now the 1-to-1 is a lot higher, no? And if we put it here, yeah, it's around the 0.618. So let me show you immediately all the ways to calculate a wave 5 target. So the 1.236 is going to be your minimum coordinates. We're going to make that one a little bit bigger. Make this one bright green. I was already thinking, like, wait, how's the 1-to-1 that low? Now we know. Now we know. Okay. Now I use my green boxes for the coordination as well. So 3, 1, 3. So we do that. Up, up, and boom, boom. And there we go. 78.6K to 110K. Okay, small little adjustment. There's mainly 3 ways to calculate a wave 5 target area. One is the 1.236 to the 1.618 Fibonacci from the high to the low of a 4. The second one is a trend-based fib from the low of 1 to the high of 1 to the low of 4. And the third one is a trend-based fib from the low to the high to the low of 4, and that's the 0.618. Which is on the chart over here. You can also use channels, but I'm not personally really a fan of channels. I prefer horizontals and fibs over channels, but if you want to use channels, you can as well, of course. But never mind. We're looking for price to move to the upside and then take it from there. Now the probabilities in this range, right, are higher to move up, also supported by the fibs inside this range. So we have 2 886 touches. The 886 is a very rare target for a wave 2, common for a wave B or a wave X, so any move to the downside has a higher probability of being a wave C or a Y, which in turn increases probabilities to then move up and sooner or later take the all-time high. That was something we mentioned here already. We got to move to the downside, labeling it a wave C or Y, and then you want to see a move back to the upside to sooner or later take out the high. Now we hit another 886. This one was taken from the high to the low here. The second one is taken from the high to 56K. We took it, right, or we hit it once. Any move down has a higher probability of being corrective, increasing probabilities to sooner or later take the high. Now, what is quite common and what happened in both cases is after an 886 touch, price likes to retrace to the golden pocket. It's just a pattern. It's something that keeps returning. It keeps appearing on the chart. Of course, it's not 100% hit rate, but it does happen very often that after an 886 touch, you move towards the golden pocket, find support, move up, and then fill, or find support and eventually continue. The golden pocket is quite interesting, so it is something that I can at least recommend in your fib templates. I have it as 618 RT, which is retest basically. 886 golden pocket, potential for continuation if we see some solid signs of strength. You know? Now with the potential low of wave 4 being in, we look for impulsive structures to the upside. Naturally, we're then immediately looking at the most simple impulsive structure, which is a 5-wave move. 1, 2, 3, 4, looking for a wave 5. Right? Most common target area, yes, Ed. So the most common target area for your wave 5, right, is in the box here, 73.4K, 76.9K. The 1.236 taken from the high to the low of 4 with the normal Fibonacci pool. 0.618 from the low of 1 to the high of 3 to the lowest point of 4, giving you this area on the chart. Invalidation, price moving down before taking out the high, 65.5K. So we first want to take the high in this particular scenario. Arguably, this is your most bearish, bullish scenario. Because here you expect a wave 5 to finish, and then either this wave 5 is going to be a wave 1, you look for a 2 and continuation up in a 3, right? Or after this wave 5, we finish the yellow wave 3 and we go and continue in a multi-month range to come. We'll only figure that one out once we got the information. The bearish scenario here is a move to the downside. However, and I can also talk about this range a bit more at a later stage to explain why I have this on my chart right now, is a 1-2. Let me just do it. So because price touched the 886 taken from this high to the low, the probabilities have decreased for a wave 1, a wave 2, and then an impulsive 3 to the downside. Which means that if we would look for an impulsive move, we would look for a wave A, B, C continuation. However, if we look for a wave C to the downside, we want to count internally a 5-wave structure, a 1, 2, 3, 4, and eventually a 5 to move down to the wave C target area, right? Which should be below A. But if this is your high of B, after a zigzag to the upside, what you want to count is a wave 1, 2, 3 to the downside. On the lower time frame, your wave 1 has an extended 5th wave, which is rare. Most commonly, your longest and strongest impulsive structure is your wave 3, not your wave 5. So that is uncommon, lowers the probabilities. However, what has more impact on the probabilities is also again hitting locally the 886. If this is a 1, you look for 2 and a 3 down, and you take a fib, then we have hit the 886. Rare for a wave 2, common for a wave B or a wave X. Therefore, probabilities increase that if you do get a move to the downside, it's going to be a wave C or a wave Y, increasing probabilities to move up. So in other words, you're going to look for a smaller ABC and then move to the upside, or a smaller WXY and move towards the upside. So in other words, you won't find yourself all the way down here in this particular scenario, right? Now the reason I then go for a wave 1, 2, right? 1, 2 continuation instead of a WX and then a wave Y. Let me put that one on the chart. This is the ABC. Is because for wave Y, right, a zigzag is expected, or is something we look for in wave Y, as well as a flat. So we can have a W, we can have X, and then inside Y, we can look for a flat ABC, or a zigzag ABC, as well as a flat ABC. No problem. What lowers the probabilities, however, though, is your wave X in this scenario being a expanding flat ABC. So with a solid 5-wave structure in this move to the upside. That is why I counted a 1, 2 preferably instead of an expanding flat in X. But nonetheless, in both cases, you would look for price to move down and then up. For wave Y, your targets are a bit deeper, as the target starts at 63.1K and then the low is 54.3K. Right? While for the impulse, you don't want to go below the low. Your common target for 2 is 05786, 64.2, 59.8. Uncommon, the 382, 66K, rare, 886. This is your common area of support in that case. Inside wave 2, we then look for a 3-wave structure, either a zigzag or a flat. A, B, C for a zigzag, right? This is your common target area, or for a flat, A, B, and then a wave C. This is your common target area. And you can see that if we compare a 3-wave structure here, A, B, C flat, or a zigzag, with the WXY, there's only a small little bit of overlap with wave Y. But there's a lot of overlap with the area for a wave 2. In both cases, you go down though. So yeah, something to keep an eye on. That is the bearish scenario at the moment. Right? So we have either a zigzag or a flat. Look for a move down, take the lows of the range, find proof of support, and then we look for price to continue its way towards the upside. Your most bullish scenario is a multi 1-2, 1-2, 1-2 continuation to the upside. And this is also again where the range comes in, and something we will talk about in a second, because you can't really finish this wave 2 nicely here at the moment. I can put it there, but then this has to be a wave 1. This has to be a WXY in 2, hitting the 886. 886, rare for 2, common for B or X, increasing probabilities to move up is then a wave C or Y. That's not what we're looking for. So preferably, right, your wave 2 moves somewhere here, either this low or this low or this low, but wave 2 cannot be a triangle. So we cannot count triangles in here for a wave 2. If we do, then we have to think about a wave 4, not a wave 2. This is, of course, your most bullish structure. If price is going to move very impulsively to the upside, then it is very unlikely this was a triangle. Now, probabilities have remained the same. They are bullish on pretty much all of the time frames. Do keep an eye open for potential retracements, right? Because retracements, especially in a bullish environment, are interesting because retracements give opportunities and therefore potentially compounding, right, for long positions or new long positions. So on the weekly, bullish; on the daily, bullish; on the 4-hour, bullish, but always paying attention to a potential continuation of the range that we're in. On the 15 minutes, 886 touch at the high, right? This is from this morning, so it's not edited. So we had some bearish CVD divergences at the high, but also an 886, which you can see here. 886 touch at the high, increasing probabilities that any structure that follows is part of a corrective structure, increases probabilities to sooner or later take the high. Now, as mentioned in the morning update, we had bearish CVDs, and what I wanted to see on the chart is price to grind towards the upside and show me some more bullish CVD divergences. Now, we have this move to the upside over here. We are at resistance, a value area high of this range, as well as the golden pocket is right here. We do have some bullish CVD divergences here, but these already played out now, and we still have super, like, it's either mega leading or we have bearish, big bearish CVDs. Lower high on price, higher high on yellow here. Also on blue, by the way. Lower high on price, higher high on blue. Now, with regards to the bullish CVDs at the lower end of this range, so the first one appeared here, higher low in price, lower low on blue. Small bullish CVD here. And then as price continued to range, yellow started to also form bullish CVD divergences. You can see the dip in the CVD here, while price is creating a higher low, but a lower low in yellow. So a little bit of bullish CVDs there as well. Eventually we get to move up, move down, no bullish CVDs at the moment. So bearish CVDs are definitely present, right, clearly. And it's quite difficult to say if they are leading CVD or not. In other words, price continuing to the upside or we get a bigger move down. Continuation of the range, it's at least in the back of my mind. If we count this structure locally as an impulse, so let me at least cover this. Then preferably we eventually still look for wave 4. Either your 3 is in or you look for a higher 3. That doesn't really matter. Eventually you look for a wave 4. The target area for wave 4 is not yet touched with the low that we have here. So if on the lower time frames we look for an impulse from the low, then we want to see a 1, 2, 1, 2, 3, 4, 5, 4, 5 preferably. And eventually after blue 3, we want to see blue 4 and move up in 5. So the retracement target for 4 is still lower. And if price moves to the upside, the fibs will move to the upside as well. So in other words, let's keep it very, very simple because I can imagine most people enjoy simple. So on the weekly time frame, highest probability scenario, impulse to the upside, still expecting at least 2 pushes to the upside. As long as you don't hit 49.3K, this is at the moment the primary structure where we expect continuation, and then we'll wait and see if you do get continuation, how high price goes, right? So in other words, we expect a continuation of the trend, highest probability on the weekly time frame. On the daily time frame, in both of the scenarios that I have shown, they're both bullish CVD or bullish scenarios anyway, but the bullish structures have a higher probability, right? So either looking for continuation directly or we get a bigger move down in continuation. That pretty much depends on the range, which then is the 4-hour time frame. So on the daily, probabilities are higher for the bulls. On the 4-hour time frame, and this is what I'm going to cover next, because we're going to look at this range here. In the probabilities earlier today, I wrote above the number 1, paying attention to potentially a continuation of this range between 73 and 66k pretty much, no? So keeping an eye on signs of weakness as well, which includes bearish CVDs unless you take the local high again. And then we have bullish and bearish. And then I write probabilities on the 4-hour are higher for the bulls compared to the bears, because as long as we don't see great structural weakness, we can't really give highest probabilities to the bears. So the bulls have the higher probability, but that starts to change the moment you take out 68.5, gives a bit more probability to the bears. And if you take 67.2, probabilities increase for the bearish scenario to move to the downside and only go up at a later stage. So as long as price doesn't really take out the lows, it's difficult to give highest probabilities to the bears, right? Probabilities would be higher for bullish scenarios. Now then, let's go into the nitty gritty. So the higher time frames are clear. We are looking for upside. Voila, right? That's where you have it. That is very simple. And some Elliott Wave analysts, as well as many people, like to keep things very simple, right? Which is absolutely fine. But we'll also like to challenge ourselves and count local structures, which we do all the time, and we will do again, because this range, has it ended? As mentioned, the probabilities are higher for the bulls as long as we don't see structural weakness, and we stick with that. But I do want to go over this range and talk a bit about probabilities at the end. When we look at a corrective structure, there is only really a couple of scenarios you have to keep in mind. The zigzags, the flats, the triangles, and WXY. So let's go over them one by one, and it will go very quick. For a zigzag, we're looking for a 5-3-5 wave structure if the range has ended, right? So the question is, has the range ended at any of these lows, right? This low, this low, this low. That's the question. Has it ended? And if yes, what's the most probable structure of this range? Right? Doesn't yet change probabilities that I just communicated, but this is the nitty gritty. It's interesting stuff, in my opinion. Now, if we look for a zigzag in a 5-3-5, then first of all, this move down has to be counted a wave A. Your wave 5 is extended, which is less common. It's acceptable, it's just less common. But mainly wave C has to move below wave A, which is not the case because we have a higher low. So a simple zigzag goes off, right? It's not allowed. A double zigzag in a W, X, and then a wave Y. Now we can count potentially an ABC in here. Well, that can work, right? We can count an ABC in here, absolutely. However, your wave Y, first of all, did not end below the low of wave W, which is, I mean, in a double zigzag, you want wave Y to move below wave W, so that would be incredibly rare. And besides, you did not hit the minimum target for a wave Y, which generally is the 0.618 trend-based fib extension from the start to the end of your W to the end of your X. This has to be the end of your X because you're looking for a double zigzag, which then is this final three-wave structure, right? Not this high. So a double zigzag is pretty much out of the question. A triple zigzag, W, X, Y, X, Z, should be a sharp corrective structure, is incredibly rare, never preferred unless all of the other stuff fails. So that's not really something we're looking for. So then we go to flats. Flats, I only have to say one thing. The 0.9 is not hit, so we can't even look at flats, right? That's a minimum target for a wave B and a flat. For a wave A, minimum target B and then C, but this move up did not touch the 0.9. Out of the window. Then we have a WXY, right? The WX and then eventually the wave Y. I skipped the triangle for a second because the triangle is related to the two invalidation levels that I have on my chart here, which impact probabilities as communicated just now. So in a WXY, we're looking for either a zigzag or a flat in W? Well, clearly we don't have a flat here, so we need to think about a zigzag. Then we need an X somewhere and a Y somewhere as well. Inside wave X, you can have any corrective structure. And in this case, the only structure that could really work would be another WXY with inside Y a flat, but your wave C starts to be very long. You don't want to see this high taken really. The moment you take this high after the 2 fib time, which is 6 p.m. today, which is in 2 hours and 5 minutes, the probabilities significantly go down for this to be a flat. So something to keep in mind, but you're going to be looking for then an X and eventually a wave Y. Okay, it's not, there's no hard invalidation here, right? I did receive, look, a WXY is a valid pattern on Bitcoin and happens very regularly. It's not one of the most common structures, as that is the zigzag and the flat. Triangles are actually quite rare. They are not common. Yes, drawing the trend line is very common. You can see all over internet people drawing 2 trend lines and be like, oh, look, triangle. Yeah. Anyway, so a WXY, yeah, still has potential. So it's something we at least have to keep in the back of our minds, but we are reaching a bit of a time limit for a potential C here. And then we have the triangle. So in other words, with a WXY, you're not finished yet. So if we want to finish this range at any of the lows here, we need something else than a WXY. Because to finish at the lows here with a WXY, you need a zigzag, X, and then a flat or a triangle. But there's not any triangle going on here unless it's somehow expanding. And there's no flat structure because this is a 3-wave move to the downside, right? It's not a 5-waver. So then we end up with the triangle. Now, triangles in general are complex structures and can be a pain in the ass to count in detail on the lower time frames. In this case, with the triangle, we then either have a wave A, B, a wave C, D, and E, or D and E. Those are your 2 options in a triangle. A couple of rules. In a triangle, 4 out of the 5 waves have to be simple zigzag structures, meaning a zigzag ABC up or a zigzag ABC down. 5, 3, 5 wave structures. Only 1 wave is allowed to be a complex structure, and it is by far most commonly a wave C, which is this wave, or a wave D on the second place, but the first place goes to a wave C. Any other structure in a triangle being complex is incredibly, like, okay, besides wave E. So let me be very specific here with the rules. Okay, wave D most common, or wave C most common for maybe a double or triple zigzag, but then of course a double, as triple is incredibly rare. On the second place, wave D, and on the third place, wave E can also be a triangle. So, you know, exception. However, wave A and wave B in a triangle should pretty much 99.999% of the case, 100% of the case, be simple zigzag structures, a 535A or a 535B, right? Simple zigzag up, simple zigzag down. The complex structures come after. If you then look at this triangle, and I want to go to the 1 hour time frame, that means we need to count a zigzag 535 in here and a zigzag 535 in here. That's a requirement. So let's zoom in. We need a 5-wave move finished. 1, 2, 3. In this case, we need 4 and 5. There's not really any other great place to finish your impulsive structure. And the reason is we never really had if this is your 2, where's your wave 4? Right? We need a 5, 3, 5 to the downside. 1, 2, 3, this is 4 and 5. I mean, most commonly, wave 4 is longer in price and time than a wave 2, right? That is just simple Elliott waves. That is simple theory. Now, this is one candle. These are many candles. So it doesn't really make sense to count this a wave 4 of the same degree as this wave 2. It's just low probabilities, which is in the end what we trade. So preferably, your wave 4 is a flat, a zigzag, and a zigzag W, X, Y. 1, 2, 3, 4, 5. And then we have a correction up to create a wave A, a wave B, and then a wave C. Possible. And the wave C is sharp. Perfectly fine, no? What's up, Steve? Oh, Contrarian, by the way. Yo, Contrarian, how are you doing? Welcome back. You got the badge again. Now you got the green one, by the way. Look at you go. Yo, Contrarian, cheers. Or the blue one, not the green one. Yo, welcome, man. Cheers. Welcome back to the team. You got the badge back. There you go. Cheers, my friend. Appreciate it. So we have the ABC. Cool. Let me put it on the chart with the normal. So we need an A, we need a B, and we need a C. Okay? It's not really any other way to count this. Take a trend-based fib. Let me first use that low and then here. We want to also measure wave C because of course your ABCs should be valid with according to targets, and that works. So okay, we have a potential ABC. Now wave B needs to be pretty clear, no? There's only one way to count this. And that's like this. In your wave B. In the triangle. And then somewhere here are D and E. Let me remove this because I explained it, and that as well, and this as well. Okay. Inside wave B, we then need a 5, 3, 5. Pull a fib from the low to the high of A, right to the lowest point in B. Give it a little bit of leeway. And you will see that price has hit the 0.618. Okay, I mean, it is a target for a wave C. It's a rare target for a wave C, but it is a target nonetheless. So we're going to keep this one on the chart. It's not really great for wave C probabilities, but it is a target nonetheless. So we can accept it. Okay. Inside wave A, we need to count an impulse. A 5-wave structure. Now, naturally, you have the low. So you're going to be counting wave 1, wave 2, 3, 4, 5. This has to be the high of your wave A. You can't put wave A anywhere else. And that is because the drop after, which had overlap with your wave 1. Wave 1 and 4 are not allowed to overlap. So we can't label this a bigger impulse, 1, 2, 3, 4, and then 5. Right? For more info, Leon, make sure to check the join button below the live stream. There should be a join button which pops up a video, and in about like 8 minutes I explain everything. I do have to make a new one, by the way, because of the updates in gold. So I can summarize it after the analysis. So in wave A, we need a 5-wave impulse. Now, as mentioned in the beginning when talking about the educational playlist that I now have on YouTube for all of you, there is of course a difference between the perfect impulse and the real life impulse. Rarely does an impulse fit perfectly according to all the rules. But there's a couple of at least rules and guidelines that add or remove probabilities from an impulsive structure. So here, inside wave A, we need to count a wave 1, 2, 3, 4, 5 wave structure. And inside wave 3, we then have an internal count. 1, 2, 3, 4, 5. That is pretty much the only way to count it. So we have a 1, a 2. Don't mind this wick, which is a scam wick on my chart. 1, 2, 1, 2. So a double 1, 2. And then we have our wave 3, 4, 5, 4, and then eventually 5. Pretty much the only way to count wave A here. Huh? So that then creates 1, 2, 3, 4, 5. Inside your wave 4, you pretty much need some sort of a flat structure, X, Y, and then a continuation up so that it ends here and a move up. But at least, without going to a 5-minute time frame and stuff, which I don't really like, at least there is the opportunity here, the potential for a 5-wave structure. Now also here, if this is your wave 2, your wave 4, or maybe even here, is shorter than your wave 2. It's not impossible, it's not an invalidation, it's just uncommon. Because most commonly a wave 2 is longer, or a wave 4 is longer in time than a wave 2. And this is also why this counts quite nice as a wave A, B, and a wave C. And then a wave 1, 2, 1, 2, 3, 4, 5, 4, 5. A 3-wave structure to the upside. Something to consider. Because now this is your wave 2 against this wave 4. This wave 2 is then matched against this wave 4. And this is a wave B, not a wave 2. So you now have A, B, 1, 2, 1, 2, 3, 4, 5, 4, 5, A, B, C. And that's quite a nice count. Anyway, inside wave C, we then have WXY. W, we have our X, and we have our wave Y. Voila. And then we have D and E. D, E, or D, E. It's almost like who cares? Because in the end, you know, we have 2 lows and both of them are invalidations if price does move to the downside eventually. However, there is something to say here as well. If this is D and this is E, D needs to be a 535. Now, okay, this definitely counts like an impulse on the lower time frame, so that is acceptable. We can count an impulse here, A, B, C. Okay, perfect. But then we have our wave E. Wave E, wave C is already complex, right? So wave E has to be a simple structure. Now wave E in extreme occasions, which is very rare, can be a triangle, but you can't count a triangle here because this is the end of E, which went below the wick. I do realize that on other charts, this low, on some other charts, depends on the chart, this low has not been taken, right? But then still this low is taken, which invalidates a triangle anyway. But that also means you can't count a zigzag in a wave E and an ABC. Because on some charts this low is taken and on some charts it's not. And for a wave C it's a minimum requirement. So we can't really count this as a wave E. For a triangle. Which then means that preferably you somehow have your D here and your E here. Now it's not pretty because your wave E is only a few stripes on the chart compared to very big wave A, B, C, and even wave D is a lot bigger than your wave E. But this would make the most sense to finish a corrective structure in this range. Is it pretty? No, it's not too pretty, but it would make most sense. Now, because of what we have spoken about, zigzag, flat, triangle, WXY, in this range, I do keep an eye on a potential continuation of the range, right? However, the probabilities are bullish on all of the time frames unless we see clear structural rejection and bearish structures forming, right? So I can't really talk about continuation of the range, but it is something that I have in the back of my mind, especially with Wednesday the 12th of June. Also something I keep in mind, which is a heavy news day, which can be quite interesting for a breakout somewhere in this range. So of course you can zoom out to a daily time frame, 4-hour time frame, and the counts are very easy, right? It's very easy to see the counts, it's easy invalidations, it's easy probabilities, but this is the fun stuff with Elliott Waves, right, as well. So zigzags doesn't work, flats don't work to end the range here. WXY can't end a range here with a WXY, you would still continue the range with a WXY, and then we have a potential triangle, which arguably is your best bet to end the range here. But if we have the highest probability being a triangle, that also means that on the higher time frame, you're going to be looking for a wave 4 and then a 5, and then either continue an even higher degree range, weekly time frame, yellow wave 4, or this is a wave 1, and then you reject down for a wave 2 and then go up after. Interesting. So this is what I wanted to cover in this live stream, right? So, yeah. This is pretty much the only scenario that can end the range. All the other scenarios they either can't end the range or very low probabilities. So you can only really look at this to end a range now. And it's not too pretty with wave C here touching the 618, right? Potential A, B, C, and A. We can make a 5-wave out of it, but there's also a potential 3-wave opportunity here. Your wave B has to end at this low, because wave C, of course, is a straight line up in this case. So inside your wave B, we need to count a corrective structure where your correction ends at a higher low. So that means you can't count this ABC. You can't count this a zigzag. I don't even think, no, you can't count it a flat. So not a zigzag, not a flat, right? It's definitely not a triangle. So you need some sort of a WXY in here to finish your B at this particular low. Because in this move to the upside, how are you going to count an impulse? 1, 2, 3, where's your 4 mate? And then also the highest amount of volume is in your high, which is very wave C-ish. So B preferably ends here, and then in this straight line up you have 5 waves, which works absolutely on the lower time frames. It's just that ending wave B here, it's not great, but I mean that is 5 minute and 3 minute stuff. So this is also, we are at the high of the range. So by all means, trading wise, things were, let me actually put this in a folder for now. So as complicated as everything sounds, trading wise, it was actually quite easy to trade this range. Let me show you what I shared in the setups. Scrolling, there we go. The moment I started to get interested in a long as a potential swing was the second time we came down here. That's when I started to look for potential longs, which was in this area. That's when I started to get interested. And the final long so far that I have, or actually the final swing trade long I've taken was here. Low of the range, Very clear invalidation, 65.5k for a wave 4, 1, 2, 3, 4, 5. Potential swing trade to end the range and move to the upside. However, now that we are at the higher end of the range, it's all about risk management. And even though the probabilities on the time frames are up, I can't deny that this range is not pretty. The only way to really end it would be a triangle, ending here preferably, making this a wave 1, 2, 3, looking for 4, and then a wave 5 towards the upside, ending your 5, which then becomes a wave 1 potentially here, for 2, 3, then you get an extended wave 5, 1, 2, 3, 4, 1, 2, 3, 5. Or that's just the end of your wave 5, and you're bloop. Trading wise, this was area of interest, especially once we went sideways over the weekend. Even though it's a very boring weekend, we literally moved a few $100 over 2 days. This actually did give some probabilities to moving up. We had a very clear invalidation, lower end of the range, corrective structures to the downside, not impulsive structures to the downside. We moved here to the upside, touched the 618 from the high to the low, invalidating an impulsive structure to the downside in 5 waves, increasing probabilities. This was a 3-wave move, increasing probabilities to move to the upside. So we've traded it like brilliantly. Hello, hair on the keyboard. So trading wise, it's been great. Now it's just risk management. I don't want to overtrade the range. So yeah. And now we just long and chill. See what price is giving us. The CVD divergences on the higher time frame are still bullish, and the target for these are this high. The local CVD divergences always get priority, but it's good to know about at least the higher time frame CVD divergences. Right, so as you can see, this one already played out here, higher low in price, lower low in yellow and on blue, so that's perfectly fine, right? Also here, no, 1 second. There we go. Also here, at the low, 56k, there was no interest yet. There was no strength, no sign of support the moment we came down. Once price started ranging, right, the range will give you all the information that you need. So if price moves up impulsively or moves down impulsively, wait for a range to form, and the range will always be a potential new entry. Price moves down impulsively, no interest. My long was here. This is where the probabilities started to change, which is what I then shared in the setups channel. Like, hey, we potentially got something going here as a swing trade. And then throughout this range, this is the previous range. I also have a screenshot of the current range, but this was the previous range. Move up, move down. Also here again at the low, and here at the low, nice moves up. It's all probabilities. However, with the current range, I don't really want to try and look for swing shorts, but I also am not yet too happy with the range. So the probabilities are higher to move up, and probabilities will change. Once you take this low, that's not too great. Once you take this low, the bears take over. 67.2 is a level you don't really want to see broken, because then you get very close to the lows and a bigger move down. So I do keep my eyes open for potential weakness on the charts, because why not? That does not mean we're bearish. We're attentive, right? We pay attention. We don't have a bias to up or down, because we don't care if price moves up or down. As a trader, we don't care trading at 100k or trading at 10k. In both cases, you look for the day-to-day movements, right? As an investor, you do. but the probabilities on the time frames remain higher until we see some local bigger rejections. And the bearish CVDs that we have locally, lower high on price, higher high on the CVD. As long as you don't break this high, these are not invalidated. So it's at least something to be aware of as a bare minimum. And then we'll take it from there, no? So yeah, lots of chatting. Always nice to have a look in the range. And probabilities are very clear on the higher time frames. And locally, at least keeping an eye open, right? If you have too much of a bias for price moving in either direction, you're gonna have a problem, no? You got to be able to switch when signs come in to trade the opposite direction. So you can have a bullish bias, but take a short because probabilities change, and therefore your bias changes, of course. But you don't want to keep holding on a certain bias. If you keep thinking bearish, 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 and you only see corrective structures to the downside, you're gonna have a problem, right? Because based on this move down in the range, it was very corrective price action. So eventually you're gonna be looking for longs, and that is why I started to look for longs the second time it came down. However, where we are right now, potential TP, risk management phase, and observing what price gives us next. We're at the high of the range, and I do keep an eye on potential weakness in this range. So that's pretty much it. Approaching a 5 pip time now. So if we are looking for a zigzag ABC or a bigger flat, right, in the bearish scenario, preferably you don't want to wait too long. It's already starting to be quite long now. Bearish divergence target is the low here at 70.8K, just the low in between the highs that create the divergence. We had some bullish CVDs here as price started climbing. These played out, price moved up, so that's fine. And now we wait for a bit more clarity here. I'm not really fancying new positions at the moment. I'm sorted. I'm happy. I'm chilling, and just wait for clarity, because as long as you don't really see great structural weakness and the trend is up, then from a swing trade perspective, I prefer to move with the probabilities. So unless you start taking some lower levels and start to move down impulsively, only then will I eventually start to consider shorts during a retracement. But at the moment, for me, I'm very, very patient. There is bearish CVD here. I am risk managing my long, so I'm all good on that front. If we do move down, there's no problem. The CVD divergence we have on the chart is a third divergence. So we had a first one here, lower high, higher high, lower high here as well, another higher high, and now again, lower high, higher high. The more CVD divergences you have with one pivot, the lower the probabilities of it playing out. So it's just something I keep in mind, but it's all risk management in the end. So yeah. Summary: probabilities: weekly, upside, daily, also bullish. right? Both of the scenarios shared in the end are moving towards the upside. The 886 touches we have increased probabilities to continue the trend. So sooner or later, we're looking for trend continuation. On the 4-hour, bullish till proper structural weakness is shown. We have analyzed the range in detail. The only way to really end it at the moment would be some sort of a triangle. Of course, in the most bullish scenario, a double 1-2, but yeah, your first 1-2 and you know, your wave 1 here, potential ABC, but this is then your wave 1, your wave 2 moving to the 886, 1-2, 1-2 continuation. That's of course most bullish. But yeah, there's at the moment no clear signs of weakness, so you know, don't really want to go against that. And on the 4-hour, we still have bullish CVDs, where the target is 72K. So I also keep that in mind. But I can't deny that, yeah, a triangle is the only option here at the moment. Okay. So yeah. When did we start? I think around minute 19. There we go. Okay, let's have a look. Where were we? A few videos left in the playlist. Bonjour, Eric. How are you doing? Okay. She's going to Paris. Paris. Mon ami. The playlist he's talking about, by the way, is the new playlist. Everything you need to know about Elliott Waves is in here. Every structure, every target, every fib time, you'll have to know which is relevant. People that say fib time are irrelevant is absolutely ridiculous, because Elliott Waves is based on time and price, and not only price. So having knowledge about fib time will definitely propel your Elliott Wave analysis forward, as also shown in the book of Elliott Wave Principle by Frost and Prechter, where they talk a lot about time and also ratio analysis, and also the relationship between a wave 2 and a wave 4. So having knowledge about them is important. Fib times are no invalidations, but they do have a great impact on probabilities. So any analyst saying that fib times are irrelevant, they need to clearly learn a bit more information about Elliott Waves from that regard. As time is an important part in Elliott Waves. We trade on different time frames. So if you do analysis on a weekly, right, or a 1 hour, you're not going to use the same time. Right? It's not going to be. It's going to be different. So I talk about. Where's the playlist? Oh, here. Structures, the volume, the fib targets, Fibonacci time. I give examples, especially with triangles. I explain why triangles are only relevant after a wave D is in, because up until that point, generally most of the triangles, you know, they don't have the highest probabilities until wave D would be in, to then create an E and move. And I show examples of why that is, so you can recognize it on the chart as well. But yeah, it's all there. It's all there. And it's good to see many people make use of it as well. So, yep, as shared, to have a weekly order block acting as support alongside the range at the 618 from the overall range. Wow, that's a mouthful. Let's go to the weekly time frame. Yeah, you can't yet call this an order block, right? You would need to move up. First of all, preferably move up a bit higher. Right, an order block works best if you afterwards have a good impulsive move, but also of course this candle still needs to close, so you still need to close this candle to create an order block. But preferably you do something like this: you have the block and then you move, which creates the strongest blocks. But yeah, there might be one forming depending on what we see the final few days of the week. I guess it would be unlikely to move below the support. Yeah, probabilities at the moment are not highest for that. So, you know, trading with the probabilities in the back of my mind, but also having a solid risk management plan. So the longs down here, right, that was a good opportunity. Up here, it's all risk management. So it's all about management now with regards to the existing positions I'm in. Covered, of course, the triangle as well. Stefano, welcome. Oh, yeah. So, in a nutshell, because I'm not really too. I generally don't really talk about this much. I'm not too salesy, but bronze is support. Silver is short-term updates, or whenever I think about something in between the videos, I'll write it in the Silver Updates channel, either Telegram or Discord. Or when I see stuff on the chart, like CVD divergences that I keep an eye on, or in general, what I keep an eye on is I just write it there. Gold is all about feedback, Q&A, private streams to help you learn Elliott Waves quicker, shorten the time cycle that you need to learn Elliott Waves. And it's very much geared towards, as mentioned, feedback, asking questions, putting counts on your chart. I check them. We do some altcoins, private streams. And then Diamond is all about creating a personal trading plan. And of course, also focused on partly trading Elliott Waves. So actual trading. So like Diamond is all about creating a plan, creating a strategy, creating statistics, and create something that will give you profit for the upcoming 5-10 years or longer, right? Creating a plan. And everyone there creates their plans or has their plans. And also in Diamond, my other trading strategy besides Elliott Waves is shared in there, which is a data-driven strategy. And I write about certain potential setups. Today I was live in the chatting in the voice channel of Diamond, chatting to the group as well earlier today. And it's just more about making a plan and a strategy. And then eventually, of course, trading it. Trading psychology is an important part of what we do there as well. And yeah, it's a great group. So that's pretty much, that's pretty much it. I just want to thank you for getting me an Elliott Wave theory. I have learned so much and find myself constantly counting waves. You'll never quit. The moment you're like, ah, shit, man, Elliott Waves, whatever, it doesn't work for me. And then every time you open a chart and you think it's not for me, you're going to be like, shit, that's wave 1, 2, 3, 4, 5. You're always going to be counting the charts. Once you get into Elliott Waves, it's very difficult to get out of Elliott Waves because your eyes are always counting. They're always going to try and look for a certain way to read the chart. And that's also what I like about Elliott Waves. It's like it gives you an opportunity to read the book, right? To read the chart and see where you are. It's one of the few strategies out there that gives you that opportunity to get a clear picture, and then of course probabilities attached of where you are, like reading a book pretty much. The untested 50-53K at the moment not relevant. We're at 71K, price moving to the upside, probabilities are higher to move up, and if we do see a move to the downside, the probabilities are higher to bounce inside the mid to low 60s instead of moving below 50K at the moment. So yeah, it's not really something we're looking at the moment. So the 7260, yeah, but the 7260 wick doesn't, that one doesn't matter. That one is not really relevant. That's just a potential wave 4 price action here. 4, 5, 4, 5. It's just ranging structures. The important lows are 68.5, 67.2, then of course 66.5 and 65.5. That's an important high. How to join? That's the join button below the stream or Patreon. So either below the video there's a join button, or you can open the description, scroll down, and there's also a Patreon link. Very locally bullish CVD or closed it, difficult to spot via the stream. We had, yes, and of course locally here, let's go to a 3-minute. So over here, some green candles, CVD moving down. So that's in candle CVD divergences. So as price moves up, right, there's more sellers than buyers in these candles, but price is still closing green. So there's absorption going on of market shorts with limit longs. Same is true for blue here, right? Price moving up, blue moving down. So that again is a divergence. We also had bullish CVD here, and this was the start, really. So we moved towards the upside, but then here you can clearly see higher low in price, lower low on the CVD, right? And also here, higher lows on price, lower lows on the CVD. So what I mentioned in the morning update, right, I clearly stated at the end something like, what do I want to see? At the end of the video in the probability section. So what I said is, what I want to see is I want to see price grind towards the upside and preferably see bull CVD coming in, right? So at the beginning, at the low here, you at least had bullish CVDs here and then bullish CVDs here. So you were creating a high and low, bit of bullish CVD, high, low, bit of bullish CVD. And that is what I find interesting. In my trading as well. Of course, we found some resistance at the golden pocket and the value area high. Oh. Oh. Wait. Golden pocket and value area high, and yeah, a bit of a rejection, but you are correct that on a 3-minute time frame there's a bit of bullish CVD there. So and that is also why I want to be patient here, because yeah, you have the bearish CVD, but on a 3-minute time frame you can clearly see some support. So that's also why I'm not really interested in looking for swing shorts unless we see strong weakness, and the probabilities are up anyway until you lose significant levels, and it's all about risk management. Yeah, it's all about risk management. I'm also never interested really to try and trade the exact high or low of a move. I try to aim for the 60% in between, right? So let's see what we have above us. A daily naked point of control and a daily. Below us there's not too much left, not gonna lie. There's not a great amount of support. There's only the volume levels of the previous ranges. Ta-da. today? Nope. Let's try that again. Oh, okay. Little refresh. So it's pretty much this is your support. It's the structure, the previous range, and then in particular these three levels that are interesting to me. If price does come down, those are areas of support: 69.6, 69.1, 68.8. Answer this one. Target would be the low here, 70.7k. Have you been many times to the south of France? What do you like the most down? Pros and cons compared to the Netherlands. That's actually funny you ask, because this morning when I was chatting to Diamond, people asked me, Michael in particular asked me about the south of France, and then Douwe came in later as well. Have I been there many times? Yes. Is it booked? It's done now? Also the hotel is also booked. We left we leave 18, right? Yeah, or 17, 9, and then come back on 26 morning or noon. Okay. Cheers. Okay, so I just get the confirmation that between the 18th in 2 weeks and the 25th, you will see me make content and live streams from the Seychelles. So that's going to be quite exciting. I've never been there yet, so I look forward to it. But tickets are booked. Hotel is booked as well. I'll take my laptop with me. I'll take all of my gear with me as well. And we're going to do some live streams and stuff. That's also, of course, when I'm traveling, I always make content on Instagram as well, in the Instagram stories. I'm very inactive on Instagram, I know. But whenever I travel, I tend to put stuff on the stories. So you will find some more personal stuff in the Instagram stories. Link in the description. But yeah, we will be in the Seychelles 18 to 25 and fly 17 night, come back 26 noon, I think. So just so you know. I will be flying, so I'll be offline and then make content from the other side. So I don't have two screens as well. For the ones that have been here earlier, when I was in Saudi Arabia and in England and the US, you will know how it goes. But I will continue making content. So about France, have I been there a lot? Yes, because my mom is French and we always went to holiday there. So every year as a kid, we went to the south of France, and we always stayed at a camping called Les Cigales. And nowadays it changed. In the past it was without the houses. Like eventually it's just houses stacked to like next to one another. It lost a bit of its personality. So yeah, but that's always where we went, which is in Le Muy, about 30 minutes away from Saint-Tropez, and then it's close to Nice and Cannes and the whole area, Monaco. So yeah, I've been there many times. What do I like the most? Lifestyle, outdoor activities, weather. Gotta love the French cuisine. My wife says wine, which I guess is a good point for her, but I don't drink wine. So yeah, those are some of the things. It's lifestyle mainly. It's mainly lifestyle change. And pros and cons to the Netherlands. I mean, it is a European country. Safety in both cases is the same. The weather in the south of France is better. There's more lifestyle choices in like activities. So you have the mountains, you have the ocean. So you can make use of both. I love the mountain. I used to be a snowboard teacher in the past. That was a job that I had, like a side job, next to your study. I was a snowboard teacher back in the day. But you can also go for hikes, and you can climb the mountains, and you can swim in the ocean. And of course, ocean, we also have the ocean in the Netherlands. So, you know, in that case, ocean is equal, but it's more like you have a bit more options. The weather is on average more sunny days. Yeah. My wife is going to start her real estate business there, specifically focused on the south of France. So that should be exciting. I want to visit the Netherlands. It has such a good vibe. Yeah, the Netherlands is great. It's an amazing country. It's very well organized. Yeah, I'm sure you enjoy it. Make sure you come in summer so you don't have, hopefully, too many rainy days. Cheers, Leo. Always a pleasure. I enjoy sharing as much as I can and hopefully help people out in their trading journey. What indicators tool do you use to see weakness or strength? Pretty much everything you see me use on a daily basis. So all of the target boxes, the lines, the CVDs, the structure from an Elliott Wave point of view. Yeah. So of course that also means that different people will look for different signs of strength or weakness, depending on the preference of tools. So some people will look at RSI or MACD, money flow indicator, other stuff. But I don't like those tools. So I like volume levels, horizontals, time frame horizontals in particular as well, next to volume levels, CVD, which is related to market orders, which is also again related to volume. So yeah, I'm a big fan of those type of levels or indicators, which means CVD pretty much. 72 S&Ps possible today. Yes. We do have some bullish CVDs building locally. There is that potential. Of course, no guarantees in trading. But yeah, 72K. We can mark it on the chart and see if we get anything. There's always the potential, but no one knows if it's going to happen. So of course you can't ask the question and get a certain answer because there's no certainties in trading. But can it happen? Oh, of course. We're very close to 72K. Of course, there's bearish CVD, but on the 3-minute also bullish CVD divergences. Also here with the red candle, right? Red candle, bullish CVD on blue. So the bullish CVDs are building, right? So yeah, there's absolutely an opportunity for price to move to the upside. Where's my chat? There we go. Do you measure CVD using the candle swing low in relation to the CVD value? Always the candle. Always the candle. Yeah. So it's always, I always use the candle, Karen, because that's what you track with CVD is of course price action comes first. And then second is the CVD line individually. Bearish CVD on the 1 hour, true, but keep an eye on the 3-minute as well. What's up, Omar? How are you doing? Weekend dump if they don't take out upside liquidity levels tomorrow night. Yeah, the weekend is coming. Generally, the weekend is a ranging structure. So we'll see where price is once we hit the weekend. Should be quite interesting. What is more valid CVD, blue or yellow? Both. So both are as important. That's why I both use them. But it's about context. So just like any other indicator, it will take time to learn CVD. It takes some screen time, right? Reading the CVDs, but it's also about context. It's very strong in the right context. So if you are at a support area and one line shows bullish and one line shows bearish, then generally the bullish one has a higher probability of playing out. Except for if you are in a very strong trend, then CVD tends to be leading unless you start to form a bigger range. So here you go, it's context, right? So I have learned to read CVD in relation to what price shows me, which makes it a very effective tool, but it takes some time, naturally, right? So I remember here, we had a resistance box here, a target box. We rejected, but then saw bullish CVDs building against the resistance, increasing probabilities to move up as volume increased and impulsivity increased. So if you have impulsive moves, also here, impulsive structure to the upside, we hit some resistance, but with this impulsivity, even though one line might maybe show bearish CVD, I mean, look at the context. And once it shows 3-minute bullish CVDs, that is when it becomes interesting to look for price to continue to the upside, passing the resistance. If there's both a bullish and bearish CVD and you're confused, the best thing to do is to stay out of the market and learn from it. So it will take some time, just like anything, using RSI, MACD, any other tool, but also CVD will take some time, but blue and yellow are as important. Like your hat. Cheers, Earth National. Earth National. Yeah, cheers. Yeah, it's brand new, so yeah, I like it. What's up, Aruna? How you doing? Strong resistance, 72 to 74. Yeah, I have the next area here. Like we do have at 72, we also have a daily naked point of control, but above that, I pretty much go into the 73Ks. I think we're going to struggle there for a day or two. The weekend is coming up. Could be nice. Netherlands in summer. Same as where I live. Northwest of Spain. I mean, the northwest of Spain is a lot warmer than the Netherlands, for sure. But yeah, summer is a nice period. You can walk around in a short and t-shirts. Many people love the like outdoorsy stuff. The cities are a bit fuller. The cafes and clubs, the restaurants are more full. So yeah. Any idea about liquidation of a 72K? Other than it's a high or a low, so there's always some liquidity above, as people tend to put their stop losses above highs and lows. I don't have an insight in how much liquidity is resting there. That would be something for like a liquidation heat map or something. Yeah. Yeah. So, what do you guys expect? What does your analysis say? You know, I've covered Elliott waves on the chart, and probabilities are very clear. I'm pretty sure I'm not the only Elliott wave analyst in here. I always say in Discord, and sometimes on stream as well, is we're all a team aiming for the highest probability scenarios that can be traded. I just happen to be the guy that makes videos. You know? So every trade needs to build their strategy that works. What's up, Rostam? Good to have you back once again. But yeah, look, like the thing is that every personality, every person, you know, is different. Every personality is different, and a trading strategy is a reflection of someone's personality. And if you want to be long-term successful, you need a plan or a strat. You can't just wing it left, right, center, or ask in different YouTube chats, are we going long or short right now? I mean, you're doomed to fail, or you're doomed. You're doomed to fail. You're pretty much doomed in that case. So you need some sort of a plan, and make sure you have a bit of an edge, right? That the probabilities are in your favor, or at least the risk to reward in combination with your win rate. So if you have a win rate of 50% or even 40%, but if you have a 1 to 3 RR, then who cares? Over 100 trades, you are profitable. You can only then try to increase your win rate together with potentially the RR to be more profitable. But it's like in poker. It's about being right enough just once more, right? So it's probabilities. You have cards, and you poker the probabilities, I guess I can say. So, but yeah, you need a plan and a strat. And a plan or strategy reflects a personality. So are you a scalper, day trader, or a swing trader? It will likely reflect your personality. And you might start as a day trader or a scalper, but eventually notice that your lifestyle and your emotions and you know, your involvement with the chart, you're better off as a swing trader, and you'll develop into a swing trader. Or maybe you start as a swing trader but move into scalping. You'll find out what fits you, what works for you. And then also patience levels, how many setups a day, what tools do you like to use. Some people will use moving averages, others will use lots of indicators, other people use pure price action, other people use ICT, other people use SFPs. It's just whatever works for you, but it's a great reflection of someone's personality and behavior. The moment someone shares their strategy, you can generally get to know that person just by looking at the way they trade. If they don't have a strategy, no, I mean that's also very clear, no? Three-day liquidation heat map shows 72,350. Okay, just above the high. Downside 7,400. Okay, yeah, it's pretty much this low here. Bit of a liquidity grab. Not much of a liquidity grab though, but still one. Around 4 billion of liquidation between. Yeah, I'm not too experienced with the liquidation numbers, so I don't actually know what's a lot or not. I only know that next week should be very interesting. And that's why when I think about a breakout of the range, I would think about next week, Wednesday, June 12th. I've been saying it for a while, but this day, there's a lot happening on this day. And I don't follow any news except for this website. I don't know what it is, but I do know that there's a lot happening. And 2:30 p.m. Central European Time and 8 p.m. should be interesting. So you bet we're going to be live on both of these times to observe what's going to happen. So this is going to be a very interesting day. Inflation rate, Fed interest rate, economic projections. If I have to believe Discord, this should be quite an interesting day. And yeah, I would like maybe to end this range next week. I'm off to play a poker tournament this week in Barcelona. Well, look at you go. Are you a like amateur, semi-pro, pro player, Cosmin? I mean, if you are a poker player, you have a great advantage to be a profitable trader. 1 second, I'll show you. So there's a guy that's called Jared Tendler, and he writes books as well, besides being a psychologist. And he wrote a book about the mental game of poker, but then after, he wrote a book about the mental game of trading. Jared Tendler, right? Link in the description. Now, this is a great book, in my opinion, which talks about psychology, trading psychology in particular, but he also has 2 poker books, I believe. So yeah, it's interesting. 4 billion is a lot. If it hit, it will a short squeeze. Okay, so you could expect a bit of a quicker move up in that case. Yeah. Interest for long between and short between. Let's wait what it will be. Have a plan, have a strat, and stick to the plan or the strat, right? So it's good to know the levels. So it's good you have a plan, Crypto Wave Rider, and then whenever price hits your levels and hits your areas of interest, observe the reaction, and if it's an interesting reaction, join the party, and if not, then another day. I've been a pro for 1 year, but very successful. So now it's just a hobby. Oh, not very successful. Okay, okay. So you have been a pro, not yet very successful. Yeah, I mean, poker is all about the slightest of probabilities in your favor and just play those small probabilities in your favor enough times, and you'll come out with some money. But it's very difficult. Yeah, you just downloaded the book on Audible. Nice. Yeah, it's a great one. I like this morning. Who was it? Hiop. I don't know if Hiop is here. So he is a Diamond member, and I was chatting in the voice channel earlier today with the Diamonds, and he just got the book and he finished chapter 1, and he was going to start reading chapter 2 today. Elliott Wave is my main structure analysis combined with, the Ishimoku cloud. Oh no, wait, it's the cloud, no? I'm so clueless. This is stuff I use. Yeah, it is. It's stuff that when you start trading, this is usually some of the stuff you encounter in the very beginning, until eventually you're gonna start and find your own way and use the tools that you like to use. You remember the 6 steps I always talk about? Eventually you find the tools that you enjoy using, and you're gonna remove all of the other tools. But looks like the cloud is not much of a cloud at the moment. Interesting, huh? Oh, there he is. Oh yeah, there he is. Mapping emotions while looking at the chart. Good stuff. Good stuff. He's putting it into practice. Very nice. Very, very nice. By the way, one thing that so we have the high above. All right, interesting. The main area of support would be the previous range if you do move down. Impulse to the upside. No, where is it? So we didn't actually hit the wave 4 area. If we would look for 1, 2, 3, 4, 5. So if price moves up, the target area moves up. If we ended here 1, 2, and this is your 1, 2. And if we finish the triangle here, here, and then count a wave 1, 2, 3, and then look for 4 and 5. The range that we're in right now has the potential of being a 4, then create a 5, and then after wave 5, you range during the weekend, which is typical weekend stuff, no? Now, because of the short wave 2 here, preferably this is then your 4, final leg up in 5, potential here for a 3-wave structure, shallow retracement, hitting the 2, 3, 6, and then possibly continue. We'll see. If price hits the 886, as always, the probabilities increase to take the high, possibly retesting the golden pocket. We are now above the golden pocket. Dave. Yo, Dave, what's up? How you doing, man? How are you doing? By the way, Dave, do you have a specific gym plan for yourself, or do you just, do you train for something, or you just train for fit from tip to toe? Looks sus. Okay, let's have a look at what we see here. Bit of bullish CVD, green candles, CVD moving down. Already played out. Yeah, not too much weakness. Oh, some bullish CVD on the 3, bearish CVD on the 15. I typed looking sus and Google sent me here. What's up, Mark? Yo, Hodl Crypto. And there he is. Hodl Crypto always writes below every video. Hodl Crypto always comments. Thanks, danke. Thanks, danke. English, German with a logo. Water finished now. But that doesn't matter because we're online for 2 hours, so it's time to call it an end as well. So I can do a quick summary. Quick question. Does Elliott Wave use patterns such as a bull flag, inverse, and can I learn and add Elliott Wave to my other ways of trading? Can you add it to your other ways of trading? Absolutely. Does Elliott use patterns like a bull flag, head and shoulders, etc.? No, but you will learn how to count a head and shoulders. So for example, a bull flag is counted a wave B, a wave 2, a wave 4, right? A head and shoulders is counted as a wave 3, a wave 4, a wave 5, a wave A, a wave B, a wave C, fake out, continuation, right? Alternatively, wave A, wave B, wave C, wave 1, wave 2, continuation. It plays out, wave 3. So, and of course, there's with other structures different counts, but this is how Elliott waves will. What I think will happen is the moment you learn Elliott waves, you will look at your patterns differently because you're going to be able to count the individual structures. So instead of saying, oh, I'm looking at the head and shoulders, you're probably going to start saying, I'm looking at a wave 3, 4, 5 and a retracement to the downside. And then it just happens to create a head and shoulders pattern. But your win rate will go up if you will have a good understanding of Elliott waves, because you will have a better idea of if the head and shoulders is going to create a fake out, A, B, C down, a 3-wave corrective structure, and then move and continue, or look for continuation in a bigger wave 3. So you currently maybe trade patterns and you have a certain win rate and probabilities. But I think that with Elliott waves, you'll be able to up your win rate by having an understanding of what is the head and shoulders. What am I actually looking at? So people that don't know Elliott waves, they just see head and shoulders, but they won't be able to identify, is this a wave 3, 4, 5, A, B, C, and continue? Or is this the end of a trend, wave 5, A, B, C, and then 1, 2, 3 to the downside, right? 3, 4, 5, and then start a new impulse, 1, 2, 3, 4, 5. Or is this A, B, C to the upside and 1, 2, 3, 4, 5? However, if you have knowledge about Elliott waves, of course, to a certain degree, you will have a higher probability of trading these patterns because you have a better understanding of what you're going to be looking for, continuation or a liquidity grab and move up, which also means that you will learn take profit areas, because for a wave C, your take profit area is here, but for a wave 3, take profit is here. That means that if you do grab the low, you know, okay, this has to be my TP1. If it continues, I know my TP2. If it rejects, I took TP, my stop is break even. So I think that Elliott waves will help you in your journey when trading different patterns. Absolutely. And I think you'll also like it because Elliott waves, in a way, I mean, it's different to pattern trading, as I guess most people what most people mean with parents, like W's and cup and handle and all that stuff. But in Elliott waves, you have the impulses, you have the diagonals, you have the triangles, you have the zigzags, you have the WXYs, right? So those are also patterns in their own regard. It's different, but yeah. So I would fully say yes. It's like math. It's only fun when you start to get it. Oh yeah. I quit Elliott Waves for 2 months in my first year, at the end of my first year of learning Elliott Waves, because I got so pissed back in the day, like back in the day. I didn't get it. And eventually things clicked. The final thing I learned was WXYs and WXYZs. Dave Biceps. Mark is more of a swinger too, I bet. More of a swing trader with Elliott Waves and a day trader when opportunity presented. And that's a good way, yeah. I'm also more and more transitioning into swinging. Just because it also fits my lifestyle better and better, as it gives me more time in a way. So, yeah. Johan Boranat. I saw your set of videos about Elliott Wave and loved it. I wish I had that when you started years ago. Yeah, I wish I had it as well back in the day. But yeah, cheers, Johan Boranat. It's a pleasure. I'm happy that you enjoy the videos and the playlist. This is public, everyone. It's on the channel. And yeah, just I launched it yesterday. It went online yesterday. It's everything you need to know about every structure in Elliott Waves in 16 out of the 18 videos, less than 8 minutes per video. I will still add videos to the playlist. So even though all the structures are covered, I will still add some videos. I want to make a video about the 886. I want to make a video about the 618. I want to make a video about risk management. Want to make a video about how probabilities change as new information comes in, which I already have done a little bit in the triangle videos as well. Because in the triangle videos in particular, I share an important tip, which hopefully helps people to don't get baited by fake outs in triangles. So, but yeah, there's still stuff to come. Is there very local 3-minute CVD divergences right now? So not to forget, this is what the 15-minute looks like: lower high, higher high. It is a third divergence with the top though, so probably still bearish CVD, but generally a bit lower probabilities. On the 3-minute though, we started creating some bullish CVDs at the low here, higher low in price, lower low on the blue and yellow line, right? And here again, higher low in price, lower low on the CVD on the 3-minute. So that is where it started. And then here, yeah, so higher low in price, lower low on the CVD, right? Price moving up, CVD moving down here. I mean, yeah, and this is a bit of a wick low. Never too big of a fan of big wicks. I mean, big. We're on a 3-minute time frame. But yeah, you do have higher low in price, lower low in blue. However, look at yellow, right? You also have lower high in price, higher high in yellow. So it's a bit of a mix here, very locally at the moment. If you take out the high, bearish CVD is invalidated. If you take out the low, then the bullish CVD here on blue, so only looking at this bit of the chart, would be invalidated. Also, by the way, you create currently a red candle. How many minutes is this red? Is this... Okay, we have 45 seconds left. Currently, you create a red candle, but CVD is moving up. There's more buyers than sellers in this candle, but it's red. That's an in-candle bearish CVD divergence. So it's quite interesting. But yeah, it's a bit of both locally. Got to wait a little bit for information. You did get back to the high and touch the 886. So it is usually interesting to move to the golden pocket, which we have done once again. So touch the 886, didn't take the high, move to the golden pocket, back to the 886, back to the golden pocket, back to the 886. Scalper's dream. It does mean though that if you're looking for impulsive structures down, if this is the high, you look for a wave 1, 2, and a wave 3. Wave 2 would hit the 886, which is rare for a wave 2. So any structure down would have a higher probability of being a C or Y, increasing probabilities to sooner or later take the top. But we're in a corrective structure, so that's 3-minute stuff. I don't really like the 3-minute stuff. Like to the upside, we have the high. And to the downside, we don't have too great support. You have a bit of a double bottom here. And then you have this range. That's pretty much it. I don't really have any great strong levels. So Crazy Potato. Oh, Crazy Potato, I saw your message earlier of you finished your fibs, your Elliott Wave fibs. Very nice. I cannot tell you how important it is to do this. It will take some time, but it will help you immensely, right? To get the fibs done, the templates, the trend-based, as well as the fib. So important. It helps you so much with Elliott Waves. Game changer. And you finished the playlist. Wait, you finished it yesterday. you went through the whole playlist in a day. I wonder how long it is. It must be about 2 hours. Can I see it somewhere? Is there a way to see how long the playlist is in time? No, right? I probably need to go into my studio to see how long it is. Video count 18. That's correct. Analytics. Maybe I can see it in the analytics of the playlist. No, it's something that I just need to sum it up. I can see the view duration and all that stuff, but I can't see the time. I think it's less than 2 hours if you would just go through them one by one. It should be quite quick. However, from a learning perspective, I it's okay to do that on the first run, but then the second time, which I then recommend, is start with video 1, understand everything I say in video 1, make the notes, make the sketches, make a summary for yourself, and then try to implement it on the chart. So video 1 is an impulse, right? Just a regular impulse. So try to find impulses on the chart and then pull the fibs, pull the retracements, put some fib time on, compare the different structures and take it from there. Oh, Mark. Yeah, Mark. We upgraded Mark. He's now also sharing the playlist. Let me click. Nice one. I didn't see you sharing that one before. I probably missed it because usually it's Discord or something else. But nice. Cheers, Mark. Mark a thing. I'm yet to watch those videos. Didn't get enough time. They'll be online forever until I then maybe one day renew or update, or there's not really a reason to update it. Elliott Waves is unless a rule changes or something. But they'll be online for a long time. Bitcoin making an inverse head and shoulders now. Which structure is it and which way is going? On the daily, well, the probabilities on the daily are higher to move up. So I guess you're talking about shoulder, head, shoulder. Now on the weekly and the daily time frame, probability on the weekly are higher to sooner or later just take the all-time high and continue the trend. On the daily time frame, probabilities at the moment, right, we're on the daily, are higher to move up as well. Touch the 886, right? Accumulation range here. But as long as we don't see strong local weakness, the probabilities pretty much everywhere are higher to move up. We did some counting in the range earlier, but in this case, your head and shoulders, would lead to a price move up. However, on the daily, you can get a deeper shoulder as well, right? Which is something we've accounted for. It's an alternative scenario, unless we see local weakness. But we are prepared, and it's all about preparation, and then it's about probabilities, right? So we're prepped for a potential move down in either zigzag or flat. It's not the highest probability, but we're prepared. Right? So we just wait and see what price locally is giving us, and all the rest is communicated in the probabilities or in the analysis. Yo, cheers, Mark. Holy moly, quickly. My lungs are on fire. Good job, Sibel. Sibelita. What's up, Mr. Friends? How you doing? The AI guru. Abhijit Sinaroy. Always a pleasure. Good to have you here once again. Oh, for a swim. Look at you go. Cosmin, I'm jealous. Enjoy your swim, yo. Enjoy your swim. And it's a pleasure. Let me know what you think about it. Things take time to do right. Correct. So much better following you now. Cheers, Crazy Potato. Took you a month, but I got 2 jobs. Impressive work. Impressive work. In both ways, like working 2 jobs and also then doing the fibs and trading and education. So, wow, impressive, Crazy Potato. But hey, those fibs will save you a lot of headaches when you think about targets. You know, you just, if you label them correctly, like I show in that video as well, it will really help. Speed running Elliott Waves. Gamer, right? On the 50-minute, I can't count anything impulsive locally. Are we most likely looking for wave C? 5 waves down, down. Then impulse down in C. Yeah, the local structure. So now I gotta check. Are we most likely looking for a wave C? 5 wave diagonal. Zigzag B. 1, 2, 3, 4, 5. Okay. A, B, and then you want to have a wave is C. Right? Okay, get that. And then an impulse down in a wave C. That would be indeed a scenario that then gets you towards the wave 4 target area in a bullish scenario. So we continue to observe as price is moving up with some bullish CVDs on the 3-minute. But yes, you just missed out on hitting this area. But that is indeed the bearish scenario. I gotta say, so I also said it during the analysis, but I'm not really involved here at the moment. It's just a range. It's quite noisy. You have the bigger bearish CVD divergences. You know, it's never too comfortable too long into bearish CVD. I then prefer to wait for something to play out. Either the bears to play out or the bulls to play out, I don't care. But I'm already in longs from lower. So I'm just in risk management mode pretty much. I'm just waiting. And an impulse structure here, yeah. 1, 2, You definitely want to take the highs again. 1, 2. yeah, in that case, it would be multiple 1-2s, no? Arguably another 1-2, or there's multiple in here already. And then another one, preferably ending here because of the 886. And then you want to move up. So this is just very local. It's a bit of a mess. We know the areas of support and what to look out for. Oh. And alternatively, I don't have it. Alternatively, 1, 2, 3, 4, 5. So preferably in both cases we're then in wave 4 price action. One more move to the upside in wave 5, and then you move. But even we have bearish CVD on the 15, lower high, higher high, and on the 3-minute, right, higher low and lower lows. So it's a mix locally. Not really too interested in counting the lower time frames in a lot of detail. This is also exactly the feeling I had when I started reading price action or reading the market, reading the chart like it's a book. Yeah. Cheers, Olumek. It's a pleasure. I'm happy you like them. Yeah. Hopefully, many people will find them valuable and learn a thing or two, both advanced or beginning Elliott Wave analysts. Labor of love, big G. Yo. What are the chances of returning to test this resistance once we actually break out? So I would need to know what this resistance is. So with regards to, so if you, I guess, break out, you're talking about a breakout up now, I guess, to test the resistance. I mean, like the 886 is above us, so once the 886 is hit, right, any move down will automatically have a higher probability of a C or Y, increasing probabilities to take out the high. It is quite common for price to retest golden pocket, the golden pocket of 886, golden pocket, then either continue or fill. And if you move up, what's the chance of returning to test this resistance once we break out? So probably a retest, right? If you would take the high at 72k and then the local high here as well, on a I guess 3-min, 5-min, you might find a candle. You take the high and you're gonna range here for a short period of time. But preferably if you take the high, there's a daily naked point of control at 72k. I'm not really sure if that one holds. And then the next area of resistance is 73, which would then be the next area of interest to observe a range. So what I'm going to be looking for, right? So this is no financial advice, but if price moves up, then probably it will do so on volume, because you're going to take two highs. So that already increases volume, plus likely you have at least some volume coming in. If price is going to move to the upside on volume, I wait for a range to form. And I don't care where the range is, but the range will give me all the information. So either you take the highs and you continue ranging. You take the highs, short range, continue. I want a range of at least a couple of hours. That's what I'm looking for. So before a new range is forming of at least a couple of hours, I'm not interested in anything, because a new range will give you all of the information that you need to know from an Elliott Wave point of view. So I'll just be very patient. Wait for a range. Chart is perfect, representing one day, some ups and downs, energy going sideways before dinner. What's up, Dawa? Was nice speaking to you earlier today. Dawa. Okay, guys. Whatever price is doing next, I will provide an update later today again, but it is time for me to go. What I am gonna do right now is put a signature on the t-shirt and pack some caps. I need to leave for barbecue. Enjoy the barbecue, Crypto Wave Rider. Just a short message that it's a bit early, but on the 17th, there won't be a night update, evening update, because I'll be in an airplane between the 18th of June and the 25th of June. Live streams will be done from the Seychelles because I'll be there. And then on the 26th, I'll be back. So I will continue and try to continue the live streams during the day and the normal content schedule as good as I can. Just know that in between, it will be a bit more difficult to answer messages on, in other places, YouTube comment section and other stuff. So I'll probably let you know in that same week, so everyone is at least prepared with regards to content. Yeah, most important, also a Widowmaker. Okay, everyone, thanks for being here. Thanks for hanging out. Elliott Waves, and we covered the chart. We covered the range as well. Always interesting. The higher time frames are easy. We know where we're wrong. We've traded the ranges, I should say, very, very nicely indeed. Quite clear. And now it's we're at the high of the range. See if we can get some clarity before the weekend. No? Would be nice. So trade safe. Trade according to your plan. Have a plan or a strategy. And if you don't, work on one. And I will make sure to upload another video later today. And a live stream again tomorrow, which is Friday already. Shit, the week is flying. So yeah, thanks for watching. And I'm going to see you at the next one. Cheers.